S&P 500 right now is fighting for even on the week. Might even pull off a gain. And Kevin Green taking a look at the levels for us as we head into the last 30 minutes here. KG, are we going to be able to pull this off, finish positive?
Yeah, it does appear that we will try to finish positive here, Oliver. And here's the reason why. Yesterday, as we got into the close, around 3:45 Eastern time, we saw a significant amount of put buyers that were in the market actually selling out of those puts. And we kind of saw this ramp up to the upside. So if we're going to see that same type of action going into the close here today, it would be favorable. And then we also just saw over the last 5 minutes a significant amount of call buying taking place as well. So this market is going to try to ramp itself up as much as it possibly can here. And I would say from a volume standpoint, or if you're looking at that volume chart, 5350 is going to be your positive gamma area. That's going to be your area of resistance. But Oliver, the last couple of minutes, I would say the last 15 minutes, we've actually seen a lot of call buying happening at the 5375 and 5380 level for today. That would be the new highs for today. Let's see if we're actually going to be able to ramp this one up here.
Okay. It seems like a success that we got over yesterday's high. But not like a huge victorious breakout by any means. So I think it's almost like literally is a draw on the week. Bears just got it all out of their system in the first hour.
Yeah, and that's actually fairly bullish, right? So if you still had continued selling over the last couple of trading sessions, or that would be pretty bad for the market. But actually, one thing that I wanted to kind of highlight here from a technical standpoint, and I think you'll love this, if we can go to that open interest chart, we have a regression channel that's actually built out on that open interest chart. And you can actually see, even if you just took the prices, and I had that chart, and I only just took the prices from Monday to Wednesday, we had this blue line, or basically the mean or the average price here. We've actually been riding that line over the last two trading sessions, Oliver, straight to the upside. That's a defined trend. Now, regression channels, they can break. Obviously, the more prices that you have, you're going to have a different type of weighting. But once again, when I just say that, if you just take the prices from Monday to Wednesday and you extended out that regression line, that's the exact line that we have for Thursday and Friday for trading. That's going to be your key area. And I would probably say keep that on your charts going into next week, because if we continue that trend, once again, it's going to be bullish, and 5,400 can be in the cards maybe on a Monday or Tuesday, barring anything that actually happens over the weekend. That would be an event that would be like a black swan event, kind of like what we saw on Monday.
All right. Nice. Like that. So it's a pretty clear kind of channel that we've been in. That's good. Some consistency to our rally. When we think about the kind of settling in of all the major strikes and positioning, what did we learn across the 5 days? Because when we started off, it was kind of murky and volumes hadn't quite settled in yet. What do we have as like kind of clear guidelines for next week?
Yeah, so here's the thing. What we are seeing on the call side is a lot of intraday churn. So a lot of those call buyers are really not holding those positions. And even the call sellers themselves are still utilizing zero data expiration options in order to try to scalp premium for their portfolio, not really structuring on the longer duration side. But we still see that long put scenario still taking place. So there's still some hedging activity that is taking place right now, which is not surprising, especially after an event like this week. And then also for next week, as we have CPI coming out as well as retail sales. But it's really thin on the upside, Oliver. That's what I'm trying to highlight, which a thin market to the upside could also mean that we don't have that many resistance barriers. Those positive gamma levels or those positive dealer levels are so spread out to the upside here that we could have, in the right environment, just clear sailing to the upside. Downside, we have more support structured out there at the 5,300 level, as we talked about, and kind of inching all the way down to 5,175 and the 5,000 level. It doesn't appear like we're on that trajectory, at least for the last couple of minutes in this session, but we're inching higher here, and that spreading out, or the gaps to the upside, is actually primarily bullish here for traders.
Okay. So it looks like things are kind of normalizing in a bullish way. It's probably like that kind of profile there looks about as good as you could have asked for, considering where we were to start the week. That profile kind of looks more like what it was in the weeks prior. Am I wrong?
Yeah, especially when you're looking at, that's the volume profile. So yes, it's starting to fill out a little bit more. Now, volume is actually still light on a relative basis for S&P options, but it's stable. We're not having a lot of erratic behavior on the call side or put side over the last two trading sessions. So I think that's a start. And then the last thing I also wanted to kind of highlight, the move that we had yesterday was substantial, right? An over 2% move to the upside. But if you look at the S&P 500 composite volume, it was still relatively light. It was actually the lightest trading session that we've had for the month of August. Now, granted, we've only had 9 trading sessions, but that is something to kind of note. Usually when you have very large upside days when it comes to price action, you want that to be complemented by also large volume. And we just did not have that yesterday. And today, we will have the market on close orders in about 10 minutes or so. We'll see that last bar for today actually inching to the upside. You want to see this exceed, or the volume for the composite to exceed what we did for yesterday. Also having a bull candle that would give you confirmation that maybe we did see a near-term bottom in the market for now.
Okay. All right, love it. So we've kind of grinded our way back, and I think that the kind of way you're describing how the options market has flowed kind of resonates with the fact that VIX came down pretty quickly into some fairly recognizable territory, like we were talking about with Henry Schwartz. I mean, the fact that there weren't massive, big positions getting built up kind of in either direction, that we're just kind of letting dust settle, I guess makes sense for a VIX back into the low 20s.
Well, so we haven't seen a huge increase in puts being added into the market. So you're right there. What I will say, though, the VIX is a really decent gauge. But what we really care about, though, Oliver, over the next week or week and a half is the VVIX, the volatility of the VIX, because that's going to really show us where premiums are going to be elevated when you're looking at options in general, right? And so we did see actually probably the most meaningful drawdown in the VVIX today, down around 16 points. You don't use percentages when you're looking at the VIX, or even if you're looking at the volatility of the VIX. But you want to see this type of 10-point, 15, 20-point days going to the downside for the VVIX. That's going to draw the VIX down as well. And that's going to be the key. Over the last couple of sessions, we've had the VIX inching to the downside, but the VVIX itself was still elevated, which is why premiums for options were very expensive. And when you have expensive options, not a lot of people are really trying to trade them or scalp them. They're trying to really just sell premium, and there's just not a lot of premium selling that's happening on the upside.
Love that. Really good perspective there. Great point, because the VVIX sitting real high still, like in very uncharacteristically lofty territory. So, all right, some remnants of our little mini crash there, I guess, still lingering into the weekend and into next week. Great stuff. Thank you, Mr. Kevin Green.